This week in Bitcoin mining news, the Immigration and Customs Enforcement Agency raids an ASIC miner repair shop at a Bitcoin mine in Pyote, Texas. You heard that right. ICE raided an ASIC miner repair shop in Texas and arrested roughly half of its staff because they were undocumented. This is the Mining Pod, brought to you by Cleanspark, and a quick reminder to please fill out the survey below to enter for a chance to win a BitAxe in one of our giveaways. All right, and for the rest of the roundup, in addition to the ICE story, we've also got a hash rate market update from Ben Harper at Luxor. We're going to be looking at their forward market and doing some projections for hash rate and hash price to close out the year. We also take a look at some news for Core Scientific's shareholder vote for the CoreWeave acquisition, and one investor putting pressure on other investors to vote no. Also, how much Bitcoin Tether holds. Their corporate treasury might shock you. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today.
The future of Bitcoin and digital assets isn't being decided on the sidelines. It's being forged right here in Texas.
This October, the North American Blockchain Summit returns.
NABS is a leading industry summit for Bitcoin, digital assets, and emerging technologies.
Over 2 days, global leaders, industry experts, and innovators convene. October 9th and 10th.
From groundbreaking regulation to the next generation of technology, the conversations here set the tone for the entire industry.
This is where investors, founders, executives, and public officials connect, not just to talk, but to build.
NABS 2025 will occur in Dallas, Texas, the hub of all things digital assets.
Everything's bigger in Texas, and Bitcoin's future is no exception.
If you're building on-chain, investing in future technologies, or shaping public policy, this is where you need to be.
The conversations that happen at NABS don't just stay in the room, they move the industry forward.
We are thrilled to welcome Governor Greg Abbott to both TexCap and to the NABS pre-event welcome reception.
Join us at the North American Blockchain Summit 2025, where the future starts.
What's up, y'all? Welcome back to the Mining Pod. It is your boy Colin and your boy Matt today on as a duo. Will is out this week. And we also have Ben Harper from Luxor joining later to give us a little update on the hash rate market, see what forwards are doing, and maybe get some projections in for the end of the year as we cross the 1 zettahash milestone. Before we start, Matt, how you doing today, man?
I'm great. Good list of stories happening time in the market. Excited to talk about it.
Yeah, there's a lot of really interesting stories this week. We're going to dig right into it. We've got top of the docket right after the difficulty update, ICE raiding an ASIC repair shop in Pyote, Texas, a story that we broke this week with a scoop at Blockspace. We've also got an update on Core Scientific. It's back at $18 a share, or at least it was a couple days ago. I need to check on that as we do this update. And also a notice on their shareholder vote for their acquisition by CoreWeave. Will it go through? We'll kind of dissect that here towards the end of the show. And Tether holds more Bitcoin than you might think. A little peek into Tether's treasury holdings. Matt will run through that here towards the end of the show. And after the ICE story, we will have a hash rate market update from Ben Harper. So stick around for that. Really excited for that. And we will hop right into it with the hash price and network update from difficulty weatherman Matt Kimmel. Mr. Kimmel, how are we looking? Looking a little dicey.
We just had a fresh difficulty adjustment plus nearly 6%. Maybe I'll start with the positive. The positive is we have had a really strong price environment since Sunday. So we're recording on Thursday. We're up almost 10%. We basically went up $10,000 per coin, about 109 to right now on the screen, hash rate index has it at 119.9, just under 120,000. So the price has been really supportive, but difficulty basically just wiping everything away. And we're in a series of really strong difficulty increases. It's like we're right back to it. The summer gave you a couple nice difficulty decreases, but now we're back into the swing of essentially up only. We've had 7 straight difficulty increases since about mid-July, and it's up 26% across those increases just since September, right? Entering the fall months, up 15.5% difficulty. We are firmly over a 1 zettahash now. While we want to celebrate price, that's not the only thing that matters here. The fee market's still dry as can be. But it is a tale as old as Bitcoin time that price will bail out the hash rate increases for the mining community. So I think that's what we got.
Because price follows hash rate, right, Matt?
Oh, come on.
I can hear Ben screaming off screen. One zettahash is
better than that.
So one zettahash is pain. And it seems like you said, some are cooling down and miners are going to have more for it. I wonder if we'll get a negative difficulty adjustment this next epoch. I'd be curious to see what Ben has to say about that. But not much more to add to that. Just been really tough for miners. If Bitcoin weren't rallying right now, hash price would be firmly below $50 per petahash per day. But we will move on to our first story of the day, the scoop that we broke at Blockspace this week. ICE raids Bitcoin mine in Pyote, Texas. So the Immigrations and Customs Enforcement Agency, ICE, along with a bunch of other alphabet soup agencies, rolled up to this Bitcoin mine in Pyote, Texas on Monday and ended up marching into an ASIC repair center on site and arresting 12 to 13 Chinese nationals who were undocumented working at the facility. So the repair facility itself was called was a facility for ADW Tech, which is a Bitmain certified repair site. And it seems like I said, they were using illegal or undocumented labor for those repairs. Something that may or may not, depending on who you talk to, be something of an open secret with some of these companies, especially the Chinese ones. But pretty wild story. The source that we spoke to at Blockspace mentioned he was at work early morning and he saw an ICE helicopter patrolling overhead, and then a bunch of Tahoes rolled up with FBI agents. He got grilled, and they ended up ushering out some employees. I thought this was an interesting story for a number of reasons. One, it's this kind of the second big intersection that the Trump administration has had with the Bitcoin mining market, and in the sense of taking a kind of restrictive stance. Obviously, this has to do with domestic policy with regards to immigration. So that's why it's happening. It's not like Bitcoin mining is being targeted, right? But, we did have the CBP, Custom Borders and Protection Agency, ASIC holds at the end of 2024 under the Biden administration. That was continued under Trump before they were eventually dismissed. Ostensibly, the CBP and the FCC were looking for softgo chips that may or may not have violated or been in violation of U.S. sanctions. Softgo is being investigated, I believe, by the Department of Commerce for violating sanctions for providing hardware to Huawei. All that being said, there have been a few kind of intersections of domestic policy and Bitcoin mining with this administration. And for this specifically, I think the looming question is, if this happened to this repair facility, how many others are operating under the exact same conditions? And will ICE be targeting those as well? I mean, potentially huge ramifications here when we think about trying to get some of these ASIC manufacturing services onshored into the US. ASIC repair has been in the US for a long time. It's easy to set up, get certified by Bitmain or MicroBT. But all of these companies are trying to move into the US, but we're starting to see that some of them are working under the board in terms of the legalities. So anyway, that's all I have to say about this, Matt. Curious if you have any second takes.
They snuck this in before the government shutdown. Know that if you're a repair shop that, in your words, is under the board, this is your time. This is your time. There's no one out there right now.
This is not legal.
It's a neat story. It's interesting. Bitcoin as a whole, like you said, has more to do with foreign policy and defending the border. You already noted all this, but in general, right? Bitcoin mining is just so not a hush hush, out of sight, out of mind industry anymore. It is out in the open, and you better know that Uncle Sam and really governments around the world are watching.
Yeah, 100%. And I think that's what a lot of these companies were used to, operating in the shadows, especially the Chinese ones, when they kind of had to because of the CCP's, very mercurial stance against Bitcoin and Bitcoin mining. And we've kind of seen this with certain miners, especially from China. When they move into new regions, they kind of just play fast and loose. And they don't really, not all of them, but some of them they like to skirt the regulations or try to get things off the ground as quickly as possible. And it's caused problems, like in Angola, for instance. There was a lot of hope that the hydropower there would kind of lead to a flourishing mining industry. A bunch of miners came in, broke a bunch of rules, and they banned mining. So, I mean, you do have to wonder if there will be any knock-on effects for this. I do think, though, that it's worth mentioning. The reason why this was rated was because of the undocumented workers. So, you have nothing to worry about if you're complying with U.S. laws, allegedly. Anyway, we will leave that where it is, and we will bring Ben Harper, director at Luxor Technologies, on their derivatives desk to talk about the hash rate market, forwards, futures, and projections for the rest of the year. Mr. Harper, how are we doing today, sir?
We're doing fantastic, but a little worse after that tough difficulty adjustment, obviously. But thanks for having me on, guys.
Yeah, making your always happy to have you on. Love having the Luxor team. Making your job a little harder or a little easier there with hash price getting compressed.
I mean, it makes every year.
Sorry, before you, I always feel like for new listeners, we do a bad job of explaining what the forwards are.
Yeah.
So before you answer that question, can you give a 101 on exactly what hash rate forwards are and who the market participants are who are trading them?
Yeah, of course. So, just first step, obviously, is hash rate is the underlying commodity that Bitcoin miners produce to earn Bitcoin, right? And we really look at it, hash rate index as the underlying commodity that powers the industry. The same way, price of a barrel of oil in the oil sector, or price of grain for agriculture company, hash rate is a commodity, completely fungible. Hash price is the value instantaneously that it's worth from the Bitcoin blockchain. But of course, what we do at Luxor is we kind of take that a step further. We actually have a forward market, and it's for people to buy and sell hash rate into the future. So it looks very much like your standard kind of derivatives markets, just that the underlying asset is hash rate itself and settling to the hash price index. So in one sense, it's a new thing because hash rate is, a newer commodity in a developing and maturing industry. But at the same time, what we're doing looks very similar to what you see in other commodities. And so right now, Luxor operates what's called an OTC, over-the-counter forward market, where we match buyers and sellers for, from 1 petahash up to multiple exahash in terms of how they'd like to transact out to 12 months, 18 months into the future. So very interesting if you're watching the Bitcoin mining space, because of course hash price is useful right now, but anybody who's making investments, doing capital planning, things like that, you don't only want to know what the price of your commodity is today, you want to know what people expect the price of your commodity to be tomorrow and into the future. So that's what the hash rate forwards are all about.
So I think that's really important, anchoring it into the real world example of something like corn and soybeans, or I guess like the better kind of analogy would be something like oil or gold. But the corn and soybean one, I think, is really important when you look at, like, a farmer needs to know what they're going to be able to sell their crop for into the future, because they have to be able to to balance their checkbook, right? They're taking on massive amounts of debt. They need to know what they're going to be able to pay off in the future. And with miners, it's very similar. CapEx and OpEx are very expensive. If you can know that your hash rate is going to generate X amount of dollars over X amount of time into the future, it'd be really great for locking in revenue certainty. And also, as we will get into later, for being able to go to financiers and saying, like, look, we have revenue build for the next 6 months. So, like, we can guarantee that we will be able to cover our obligations for whatever debt instrument we're taking on. But going back to my original question, oh, sorry, you go ahead, Matt. You've got.
Can I ask questions too?
Yeah.
I don't know how we're doing this.
Yeah, go for it.
Is hash price number go down technology, Ben?
Typically over the long term, yes. And over the longer term, the reason for that is, Moore's law. It's just increases in computation. Where it's more stable is in its dollar per megawatt revenue. But in terms of, like, if you think of any computer technology you have, the price per unit of compute that you're paying on your laptop, on your phone, anything like that is, always cheaper in the future than it was in the past. And hash price does tend to follow that, though. The underlying efficiency of the machines is increasing at the same time as the difficulty is increasing, right? And sometimes that's sort of a wash, and it's the dollar per megawatt that is more stable.
It's like a snake eating its own tail. In a way, right? It's like Moore's law helps you because it gives you the boost, but it helps everyone else. So you're kind of like sprinting at the same pace as everyone else.
Yeah, that's exactly right.
Going back to the original question, when hash price is getting compressed like this, and we've had like 3 massive difficulty increases in a row, I think they were all 4+, 4, 5, 6.
All above 4.5, I believe.
Yeah. So what does that do in terms of when you're trying to sell forwards or not sell them, excuse me, but, like broker these deals? How does that change market appetite? Who's hurt most in that scenario? I assume it'd be the miners, but how does that change the dynamics of something like these forwards?
Yeah. So just on the spot markets, who that hurts the most is usually older generation ASIC operators, right? Because they tend to have higher hash costs, just as a function of the lower efficiency. And so as the hash price comes down, they're the ones that are most impacted. If you're running, more of a new gen machine, you have more margin to play with. And while the impact might hurt you, it doesn't take you as close to being underwater on a unit basis. So really that's who it hurts the most. Now, anybody who is hedged ahead of time. So this is what the forward market enables, is it enables miners to lock in production ahead of time. And so, what we've seen over the past, call it year or even longer since the halving, is that the forward market has consistently underestimated hash rate growth and overestimated fee revenue. And so miners that have been selling forward have been producing significantly more Bitcoin than miners that have just been riding spot at your kind of typical mining pool or creating their own blocks. And the reason is because those miners that locked in kind of the higher expected fees and the lower expected difficulty. And the range is pretty high, actually. Miners that are using that strategy over the last, and it's pretty, substantial, call it the last 12 months, depending how long they've been hedging, have been earning kind of 2 to 15% more Bitcoin than their peers who are not implementing those strategies. Now, it wouldn't always work, but it has worked for the last like 15 months or so.
Two things on that I think are interesting. It's kind of like a backwards looking pitch. You can say, you wish that you could have hedged, you could have locked in at 10% over what it is right now.
Mm-hmm.
The other question I have is, when does that asymmetry disappear? So I'm assuming some miners have realized, obviously it's not an infinite money glitch, but there is the market is so frothy that the expectations for forward-looking hash price are too exuberant, right? So at what point does that die down? At what point do buyers of hash rate, are they starting to get hesitant and realizing that they're a little too gung-ho? At what point do market participants start slowing down and you're going to get more of an equilibrium on those expectations? Because I would have maybe foolishly assumed that we would have hit that by now. The forwards have been around for quite a while.
Mm-hmm. But
I do think that all the signals get scrambled when Bitcoin is, above 100K. I think people's expectations maybe just take, they just go take themselves away, right?
Yeah, I mean, a lot of it's speculation. We will only know when we look back. But just based on kind of what you said, the context, Bitcoin's above 100K, lots of bullish sentiment in the markets. I know some of it's not related to Bitcoin, but in the hash rate markets, there definitely is more buyers right now than sellers. So, two things would happen, right? Something would change the expectation of buyers. Though they tend to be fairly bullish right now in our observation on our market. That's one thing that could change it. The other one is just the maturation of more sellers coming into the market, taking advantage of these markets. So that's the other thing that could bring it into a lower equilibrium. But right now, it has been pretty favorable to be a miner, to be a seller on the forward market for the last year and a bit.
Matt, you got something for him?
Does Bitcoin have a long-term fee issue, or as some people have been truncating it recently, a fee issue?
I like the pun there. I take the less worrying view. I know some people that are maybe more worried. One of the fundamental things about the fee market when I studied it is it's a capacity market. Only so many transactions can go through every block. You have this market where price transaction fee in this case is really only determined by demand because the supply is fixed. And in that type of market, what you should expect is kind of two different scenarios. When demand is not skyrocketing, you should expect fees to be low, very not volatile. And when demand skyrockets, you should expect fees to pop, fees to become volatile. And there's not really a middle ground, at least in how we've observed the fee market. And that also kind of lines up with, my expectation based on the market structure. And so the low fees in and of themselves, I don't see as evidence that we have like a long-term problem. Though, if there was a long-term problem, we would also see that as well. So I tried to take the less worrying approach. Like, generally what makes fees go higher is low fees, and what makes fees go lower is high fees. And that's people reacting to the economic incentive.
Quick plug, Colin, for you folks. Really interesting talk at Up Next last year. It was Jameson Lopp talking about how elastic the changes in prices is in fees because of the supply constraints. And we all know that limited block size kind of goes outside the what's consensus discussion really about fees and Bitcoin blocks and broader decentralization to think about maybe changing the fee market. But I would encourage those. It kind of touches on what you were just mentioning there, Ben. That's why I bring it up.
Yeah.
Those that are curious about it should go listen to that talk. It's pretty neat.
And the other thing to add, right, is as the block subsidy keeps getting halved, fees become a larger and larger part of hash price. And so for miners and for the mining market, it becomes more and more of interest.
Ben, I really liked that framing of it because, correct me if I'm wrong, I don't want to put words in your mouth, but it almost sounds like you're saying people, when they kind of doomsay about the fee stuff, are kind of wishing for something that Bitcoin isn't built to even deliver. Going back to the fact that it's like you're kind of only going to get one of two extremes. You're going to get low fees, or you're going to get high fees, because of the fact that the supply for block size is so small.
Yeah, that's totally right. And there's always two sides to things, right? When fees are low, that's bad for miners, but for senders, that's wonderful, right? And that incentivizes a bunch of new technology and new use cases to be used on Bitcoin because fees are low. And of course, if that flips, we'd just be having the opposite discussion. We'd be talking about how great it was for miners, but how bad it was for users.
And we have, the Bitcoin community has had both sides of this discussion. Between like increasing block sizes, making transactions cheaper versus like, oh, now transactions are too cheap and no one's spending wherever, Bitcoin's going to die. Ben, last question, because we need to get you going. I really appreciate the time. I think this has been a great segment. What are you seeing in the forward market in terms of end of year projections for hash price and difficulty?
Yeah, we're seeing around 1.2 zettahash. So we think that there's room to run for the rest of the year from where we are now. Obviously, the growth has been very, very fast in the last couple of weeks, the last three adjustments. And I think you had our CEO, Nick, on a few weeks ago talking about 4CP in Texas, which is this program that kind of artificially keeps hash rate low. And the analogy he was using is holding a ball under the water. And so, that 4CP mark was very early on in September, I think on the 4th. And so that's why you saw hash rate growth kind of rip for the rest of the month and into this last adjustment. But really, when you look at the new ASICs that are coming out, they are so much more efficient. You look at what they're earning on a kilowatt hour basis, right? Like something that's like 17 joules a terahash, like an S21, is still earning $120 a megawatt or 12 cents a kilowatt, which is healthy margin. And then you have the 23s and other models from other companies that are going to be in the, call it 10 joules a terahash range, which you could be earning up to $200 a megawatt or 20 cents a kilowatt. And with those kind of margins where the average cost in the sector is, call it, 4 to 6 cents a kilowatt or $40 to $60 a megawatt. It's just a lot of margin and a lot of machines coming online, and it would take quite a drawdown in price to make it not worthwhile for those companies to get those machines plugged in and earning. So, we just think the margins are there, and as long as Bitcoin price kind of hangs in this territory, at least what we're seeing and on the market, we think there's more hash rate coming online. But of course, Lots of things could happen that could, weather, change in Bitcoin price, things that you'd need a crystal ball to predict, could always change things too. So, but right now the market is expecting about 1.2 zettahash by the end of the year.
Full speed ahead. Just pray there's no chink in the track that derails the train. Ben, Mr. Harper, thank you so much for joining us. Hope you have a beautiful rest of your week and a lovely weekend, man. Thank you.
Always a pleasure, guys. Thanks for having me on.
All righty. That was Ben Harper from Luxor Technology. Always a pleasure talking with Ben and the Luxor team. A quick plug for them. If you're curious about other projections for hash rate, they have a wonderful supply and demand model for hash rate at Luxor that they sell as part of their premium subscription service for data and research. Highly recommend it. I worked with a team when I was at Luxor on it, and Ben and a lot of the guys on the finance side there put together a really, really sharp model. Gives a bunch of different scenarios. Highly recommend if you're trying to keep your finger on the pulse of where hash rate's going.
We are Cleanspark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Core Scientific returns to $18 per share following CoreWeave's $14 billion deal with Meta. So Core Scientific obviously has been kind of front and center in the news recently, given the acquisition deal with CoreWeave, all stock acquisition, in which CoreWeave is going to try to acquire Core Scientific, but there might be a bump in the road there. I do see right now that the stock is at about $18 as of this recording. That $18 per share threshold is important in terms of the deal structure because I believe that's roughly where Core was when the deal was announced with the all stock agreement. So that kind of gets Core at the valuation that they originally wanted for the acquisition. But some stockholders are not happy about the acquisition. This one company, which is the largest active shareholder in Core Scientific, with 6.2% of Core Scientific's outstanding shares, 2C's Capital, is urging shareholders to vote no on the upcoming shareholder vote on October 30th. So Core Scientific has set October 30th for the shareholder vote, and 2C's is urging shareholders to vote no, basically saying that this was kind of a reckless transaction. Core Scientific didn't do any competitive scouting for other buyers. And it was also, there's no collar on the all stock transaction. So that was one thing that investors were really unhappy about, right? If Core Scientific stock continued to tank, then there really wouldn't be much value here for investors. So Matt, do you have any final thoughts or second takes on this? Will the deal go through? The big question.
People felt that it was a bit too cheap of a deal even when the announcement came out. But I mean, major deals, very entertaining. CoreWeave, the IPO darling of the year. Core Scientific, the largest Bitcoin miner last cycle, through bankruptcy, comes out ahead, sells all stock deal. Is it going to go through? Is it going to not? It's like a Netflix docuseries waiting to happen. The drama.
It's the comeback story of the year, man.
Core Scientific, I think, is at like $4 billion market cap, right? We're talking, this is a big
5.5 billion, yeah.
5.5, excuse me. That is huge.
Yeah, we're talking massive numbers here. And as the first mover in the AI and HPC pivot, if this deal goes through, just a massive, validation of the thesis. But we'll go ahead and move on to our last story of the day. No Cry Corner this week. We're going to close on Tether. Maybe Tether will be the Cry Corner for all the Tether truthers out there who said that Bitcoin was going to blow up because Tether is a Ponzi scheme. But Tether has added 8,888 Bitcoin to its treasury and holds more Bitcoin than you might have known. Matt, what's going on here with Tether?
Yeah, they're a private company, right? So we don't get 100% clarity, but the estimate is that they have upwards of 85,000 coins. That would put them, if they were a public company, second only to MicroStrategy, right? Who has an enormous amount, 600,000 plus. I think over 3% of the supply. But so I was thinking about this, and maybe because this isn't a flash in the pan that's happened lately, right? Tether has been very strategic
Right.
with their investments. This is a large sum of Bitcoin. They've also been buying gold, land. They have a couple, private equity style portfolio of different companies. You think about how their revenue from the reserves, liquid reserves, holding treasuries, right, of what's backing the actual stablecoin itself. If we enter a structural rate cutting cycle, that really hurts the forward revenue.
Right. That's a really good point.
Treasuries, right? And so if you think of, maybe Bitcoin's an interest rate sensitive asset, tied to global liquidity, lower interest rates, expect more liquidity to come out. Like maybe it's a bit of we're going to hold a basket of things and protect ourselves for the future, which I think is an interesting strategy, which didn't start yesterday. This has been unfolding over a year plus. So yeah, Tether is always a company that you pay attention to in the crypto industry. They just raised, I think, a $500 billion valuation. I mean, that is
just insane.
That is insane.
I think it's a really clever way to look at this as kind of a hedge against their interest rate exposure with their treasuries. Because, if they've got 86,335.46 Bitcoin on their balance sheet, it's like $10.4 billion worth of Bitcoin. It's a pretty sizable treasury. Also, a good reminder per your last point that Tether is in the background of like everything that's important with Bitcoin. They share a parent company in Ifinex, who runs the Bitfinex exchange, which used to be one of the largest in the world. They have one of the largest, if not the largest, private mining operation in the world, and they also have the second largest treasury. So just don't fade Tether, I guess, is the moral of this story. But we'll wrap it up there. Thank you all so much for joining. We really appreciate y'all. Oh, Matt's got one last comment.
I want to get in the last word here. Just I looked up, highest valuation private companies out there. Yahoo Finance says OpenAI, also $500 billion valuation. SpaceX, $450 billion. Anthropic, $177 billion. Right? They have Anduril here at $52 billion. Stripe at $92. Those private companies, I mean, very successful. Stripe, right? Think of how ingrained Stripe is into our payments technology. And 100%. Tether just raised at $500 billion, on par with SpaceX, 5 times that of Stripe. It just puts into context how enormous this company is. So,
yeah, and it's just also hilarious that one of the most valuable private companies in the world, no one outside of crypto nerds knows about. It's kind of interesting to think about. But anyway, we will leave it there. Peace and love, y'all. Have a great weekend, and we will see y'all next week.